On today's episode of the Cryptoverse, BitFury becomes desperate and threatens to sue Bitcoin developers. TunnelBear is the simple VPN app that makes it easy to browse the web privately and enjoy a more open and secure internet experience. Try TunnelBear for free by checking out the link in the video description below. Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. I am your host, Chris Coney. Today is the 20th of March 2017. Two quick announcements today before we get right into it. Announcement number one is that I'm looking for translators. I'm going to post a link to this screen in the sources for today. And this is a YouTube feature that allows anyone who is multilingual to add translated subtitles to any one of the Cryptoverse videos. So all you do is look at the list, click on the contribute button, and then you will be able to sort of transcribe the episode in a different language and save it. And then that will add it to the Cryptoverse YouTube channel. And of course, I never expect people to work for free, so there's some Bitcoin in it for anyone who would like to do that, or any other currency if you don't want to receive the Bitcoin. So have a look at that link in the video description and see if you can help me out if you are multilingual. Second announcement today actually loosely relates to the main story for today, but basically Bitcoin Unlimited has now reached near enough 35% support amongst Bitcoin miners, while segregated witness stalls on both the Litecoin and the Bitcoin networks. 35% support for Bitcoin Unlimited, so just thought I'd mention that. So in terms of the market roundup then, this is a Monday edition of the market roundup, so we can't pay attention purely to the last 24 hours because we didn't do a market roundup yesterday, so the 24-hour numbers aren't going to mean that much, right? But we'll get onto Bitcoin specifically in the next segment when we look at the price chart. But you may have already heard about this. There's been some significant price movements over the weekend in Bitcoin, drops in fact. And if that wasn't jaw-dropping enough, Bitcoin's market share is now just under 71%. That's the lowest I've ever seen it. Now Ethereum Core has shaved a bit over the weekend, but it's now bounced back to $44.84, and it's back up above its $4 billion market cap. Dash over the weekend actually peaked above $110, but it's now at $108.45. And Charlie Shrem has proposed a new Dash project to create credit cards that are Dash branded credit cards, well actually debit cards. So you'll be able to load your debit card with Dash and spend it. The difference is, unlike things like ShakePay and whatnot, these will actually be Dash branded debit cards to allow you to spend in your local fiat currency. But it will be spending the Dash that you've loaded onto it, right? So I'm going to be keeping a very close eye on that. Other notables today are things like Ethereum Core, down here in 7th position, almost reaching $2 a coin. Right now, they're at $1.98. And also Zcash, where's the old Zcash? There it is, down in 11th position here. Zcash had some big wins over the weekend, but it's now sitting at $71.19 when it was below $50 on Friday, so that's quite a good move for Zcash. And then, of course, we have Steam here, which had been falling considerably lately, actually consistently, until it fell out of the top 20, which I mentioned the other day, and now it shot right back up over the weekend. It's now back in the top 20, right back to where it usually is, about 13th position. And on Friday, Steam was trading around 11 cents, and it peaked midday on Saturday at 31 cents, so that's quite a significant gain. But it's now come back to a reasonable level, which is 18 cents. I think that's still more than it was last week. You can look at the 7-day chart here on CoinMarketCap, and you can see it's still a significant gain over last week, so you have to look at it in that context. Moving on now to the Bitcoin price chart here. Now on Friday, I started this segment by saying look out below. And most of my analysis from then on was kind of hopefully focusing on my more recent trend line holding the price up, but that didn't end up happening. It was looking promising at the time, but now that has broken quite significantly. Now, not only did the price crash after I published the episode on Friday, right down to $1,063. That represented an 8.66% drop, but it also crashed on Saturday, dropping another 9.41%, and it got right down to $944.36. That would have been a right bargain. Now, yesterday there was kind of a half attempt at a recovery, but there's this long wick on top of yesterday's candle suggesting that more downward pressure there. Now, I purposefully have left all my lines on the chart here so I could redraw them on today's episode. So let's do that right now. So let me delete what I've got here. I need to select the trend line tool and then right click on these. The only line I actually want to keep is this sort of medium to long term trend line. The trouble with this charting software on bitcoinwisdom.com is that I'm never quite sure which line it's going to delete when I do a right click. So I assume that this is going to delete my Fibonacci retracement lines. Nope, actually deleted my steep trend line. So this is weird. But anyway, I'll just draw it again if I have to. I'll just right click there to get rid of that one. And there goes my long-term trend line. Get rid of that, get rid of that, get rid of that. There we go. Right now I reselect the trend line tool. Let's see if I can redraw this longer term trend line. That looks pretty good. Okay, that looks pretty good indeed. Right, because the reason why I keep this one only is because of this price interaction here. Now, what I also want to do for my projections this week is redraw my Fibonacci retracement lines. They were previously from the previous all-time high to the big crash. But what I'm going to do now, I'm going to draw it in reverse. So I'm going to take this bottom here down at 751. That's like the most recent low, and it's at the beginning of this run. So I'm going to go up to a straight line to the peak. Now, let me draw it. I'm going to disregard this 1350 because that's an outlier. So I'm going to ignore that. It's not really based on natural price movement. It was the Bitcoin EFT that caused that problem. So let me stick that there. So this is actually a retracement of a crash. So from here, right at the top, we had 1298, just tickling 1300. And then what I would expect if there is going to be a downtrend is for that whole move from 751 right up to 1300. We'll see how far it retraces before it either gets to the bottom of where it was or picks back up again. So I'm going to go back to my crosshair and see what is going on with this interaction. So you can see now I've redrawn that. This is actually me looking at this for the first time. Now I've redrawn that Fibonacci retracement line in reverse from this recent price move. This here 960 is the 61% retracement. So the move from 751 right up to 1300, 61.8% of that gain has already been lost, which is why that line is drawn there. And oddly enough, that's where the price stopped crashing and was supported. So this is going to provide me with my basis for analysis going forward this week. And in terms of trading, notice that the price is in what I would call no man's land, which is in between the two moving averages, which means no trading allowed. So in terms of the news then, I have turned to the Merkel for this article entitled BitFury becomes desperate and threatens to sue Bitcoin developers. Now I'll start off by saying today that I can see the Bitcoin civil war coming to a head. Remember that it's human beings on either side. And just like any negotiation, it starts out amicably with both sides, practicing patience with one another. However, as human beings, most do not have an infinite amount of patience. And we're at the stage now where there are threats of, miners attempting to forcibly fork the network. We've got major exchanges coming out and saying that they will list Bitcoin Unlimited as an altcoin. Then there's talk about the Bitcoin consensus algorithm being changed to allow us to vote in a different way and unstick the situation. And then off the back of that, we now have BitFury, verbally threatening some legal action. All sounds pretty bad on the face of it, but this is why I can see it coming to a head. The good thing about this is that once we get through this chaos, there will be some kind of resolution. Progress will resume in some form, and at least we'll be able to move forward rather than the stalemate that we've had for the last year or so. So we're approaching what I would term the bifurcation point, and I'll put a link to that in the sources for today if you're interested in systems theory, which is probably the most fascinating subject I have ever studied in my life. And it's been invaluable in understanding the world of blockchains and cryptocurrencies. So we'll get into that maybe another day. So it says here that George Vikvatst, vice president of BitFury, has been firing some shots on Twitter. Now, I did say that it was a verbal threat, so there's no formal action being taken yet. It's just words so far, so there's always some kind of intention behind words, though, which may or may not be obvious from the words themselves, so keep that in mind. It then says, according to him, those that might possibly change the POW, that's not prisoner of war, that's proof of work, protocol for Bitcoin will get prosecuted to the fullest extent. Well, first, why would the developers even want to change the proof of work protocol within Bitcoin? Well, proof of work is a consensus algorithm, and consensus means how do you get everyone to agree? And that's the beauty of blockchains, is that you can get everyone to do this mathematically rather than arguing individual points of view based on emotion and subjectivity. That's really the key. You need some kind of way of reaching consensus so everyone agrees on the state of the network, in the Bitcoin's case, every 10 minutes. Well, when I quote things like SegWit, if I say SegWit has X% support and all that, what I'm talking about is how much mining power is signaling support for any given version of the Bitcoin software. So they are voting on the set of rules that they think should govern the network. Now, some argue that this makes miners a privileged class, since they're the only ones who can formally vote on these issues that actually affect everyone, especially, like Roger Ver always argues, the average user who's actually trying to use Bitcoin to get financial freedom and liberty, right? Now, there's currently this stalemate which has been going on for ages. So there's a suggestion that the voting mechanism be changed so that it's not just the miners that have that voting power. So the changing the algorithm by which we reach consensus, that's what's they started to talk about that might be changed, so that instead of miners only having the privilege to vote, it would give that voting power to other actors within the Bitcoin network. Now, that on the face of it is cheating by definition. It's like, if you can't win by following the current rules, then you would change the rules. And that, to me, on the face of it, just kind of sounds unethical. So we'll have to debate that. Anyway, it goes on to say, it is obvious why BitFury is terrified of a proof of work change. The company raised over $90 million in funding, which could become futile if Bitcoin's consensus mechanism is altered. Now, some of the feedback that I've been getting from listeners and viewers is that, especially for people who join the Cryptoverse that are brand new, they say I don't provide enough context for the stuff I talk about. So I'm going to have to remember to do that. I'm talking to you guys as if you've been with me since the beginning and have listened to all the previous episodes and whatnot, and understand some more fundamental concepts about what I've spoken about in the past, which obviously isn't the case for everybody. So I have to kind of find this balance between people that have established principles from prior episodes and people who this is the first ever episode they're listening to. So for those of you that have been with me for a while, just bear with me when I go over old ground, because it's necessary to bring everyone onto the same page. So in this case, BitFury are in the business of manufacturing these very specialized computer processors. And their only purpose in life, these little processors, is to mine Bitcoin as quickly and efficiently as possible. And that's unlike the CPU in your computer, which can perform all kinds of operations. A Bitcoin ASIC, as it's called, ASIC, they are super dumb pieces of hardware. They can only perform one action, but it can do it faster than anyone else, and that is mine Bitcoin. Now, that's fine until the Bitcoin algorithm changes, or the mining algorithm changes, because then all of a sudden, all of these ASICs that are only created to do one thing, well, all those ASICs out there in the world suddenly lose their jobs. And if you're the manufacturer of these devices, like BitFury, such a change kind of threatens to put you out of business almost overnight. And especially if, like BitFury, you've had $90 million of investors' money put into your business, well, you at least need to be seen to fight for this proof of work protocol to remain, because if it doesn't, all those investors are potentially going to lose their money. So that's interesting. But it's not just the manufacturer, though. Any industrial mining farm as well. And each of those companies have invested millions of dollars buying thousands of these Bitcoin ASIC machines. And they all rely on Bitcoin's mining algorithm staying the same. I mean, otherwise, every Bitcoin miner will potentially be out of business as well, unless they can find another cryptocurrency to mine that coincidentally uses the exact same mining algorithm as Bitcoin. And like that would be, you might want to go and mine Namecoin or Peercoin or Bytecoin. And those coins might have even changed their own algorithms, so don't quote me on them specifically, but there are other coins out there that use the same consensus algorithm as Bitcoin that these miners could potentially shift to. The problem is it won't be anywhere near as profitable, and they'll just take over the whole network because of the amount of power that they have compared to the people mining those other coins right now. Now, I would quote a principle here that is being broken, which is don't put all your eggs in one basket. But the thing is, the competitive nature of Bitcoin mining kind of creates a significant incentive to do just that, to put all your eggs in one basket. I do think, however, that you could still mine Bitcoin profitably, while at the same time spreading your risk, perhaps by splitting your investment in the mining equipment across 2 or more coins, just in case this very situation arises. Saying it will never happen isn't a very wise business strategy. So with that said, let's move on to the green bit here. It says whether the proposal is positive or negative is up for debate, but the fact that miners like BitFury are using their millions to threaten lawsuits on open source developers is simply unethical. Now, I agree. And this for me is where it falls apart. Bitcoin is open source software, and the mining industry is using it voluntarily. So morally, the developers don't owe the miners anything because they have not been hired to do a job or provide any product or service. So there is no legal obligation there. The miners have voluntarily gone out onto the internet, downloaded the Bitcoin software, and voluntarily decided to start mining it. Even though Bitcoin is still classed as highly experimental software. You can't throw your toys out of the pram just when, you are being called to be responsible for your own actions. So the idea of me suing someone because I voluntarily decided to use someone's open source software, which later changed, is ridiculous. Like I say, that's the textbook definition of holding other people responsible for your actions. Now, if I were the mining company looking to preserve my business, I would go out there and argue the case from the perspective of why keeping the current algorithm is better for the Bitcoin community as a whole. In a free market economy like Bitcoin that is based on voluntary actions, you have to persuade people rather than resorting to force. And threatening legal action is just an example of trying to drag old paradigm thinking into the new world. In fact, just below this is the 3 tweets that this guy George sent out. It says, check out the full Twitter rant here. And the final one says that Bitcoin has become a multi-billion-dollar industry with great financial investment and society responsibility. We will protect this at all costs. So he's doing his thing there by fighting for the community at large. However, I would say, excuse me, George, but when did we select you as the president of the Bitcoin network? Since when were you ordained with the responsibility to protect the industry as a whole? And when you say at all costs, does that mean bringing down the whole house of cards as well? And then it says, quote, we will protect, close quote. We meaning BitFury. Well done for acting like a dictator in a decentralized network there, mate. So thanks for joining me today, guys. If you liked this episode, hit the like button. If you disliked it, hit the dislike button. Please leave me a comment below with some feedback and get subscribed. And please support the Cryptoverse and boost cryptocurrency adoption by going to cryptoversity.com/podcast and becoming a patron. From just a few dollars a month, you can secure Cryptoversity's future, get unlimited access to all Cryptoversity courses, and access a private patrons-only chat group where you get direct access to me. That is all for today, guys. I'll be back tomorrow with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.